The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome all to another edition of the Power Trading Hour at your headquarters for technical trading, TFNN.com. And of course, we've got a huge day out here, and we are watching this market very closely. We've got gold moving. Boy, did it. So we had some little rumors, some movement in some news that really had been out earlier, but hadn't been widely reported. Everybody got a little freaked out, and all of a sudden gold's up a huge amount. Just kind of interesting that I'm trying to remember what it was now, but I mean, we had, 1330, something like that. Now trading out at 1397.90 for the close in the COMEX gold market. Actual contract for gold, I don't have it right now. I have to see what we have here. Maybe I do have it here. Yeah, 1364.50. So a huge move, $31 up today on the current contract. And, you know, kind of interesting that we see at the same time, we've got the dollar index off 48 cents. So a little weakness, a little bit, a few other problems. But, of course, what we're really, I think most people are going to be focusing on gold bulls that got in at either the lows or the pullback to 1275 are pretty happy. The people that are long and strong are probably not so happy. We are seeing that kind of weakness right now, trading out at 1661.37 on the S&P cash. We do have volume, 2.4 billion shares. If you've been listening to the show since last Thursday, I've been predicting that we would have a close somewhere around 1660 to 1665, which we may even get below that. I wouldn't bet on it. Probably the odds are better than 50-50 that we close out somewhere between 1660 and 1665 tomorrow. Could we dip down another 10 points and then bounce tomorrow? Yeah, but I'm thinking we're probably got the lion's share of this unless we get some more really bad news. And we'll get into that a little bit. But the options were predicting this very, very sharply. I've been showing the charts in my daily newsletter and in the shows this week. And there was a few clues out there. One was people were, at least the majority of traders, were not out here really pushing the options up into expiration, which happens about 80-85% of the time. You get a bullish expiration cycle. That is the Wednesday before expiration week to that Friday. And what we did see was that the people buying puts and calls, no one was blinking. No one was starting to roll the premiums down on puts. The street players, at least the market makers for options, were pretty confident that it was going down. And we had a lot of very sharp predictions that we would get to 1660, 1665 area on the S&P cash from those options. So I'll pat myself on the back about 2, 3, and maybe as many as 4 times a year. You're going to get the option, or you get the opposite of the bullish bias in the market. And there are a few things you can do to really notice it, and then one of those is does the option market start to track in to the higher expiration price? And what I'd been showing pretty much all week was that it had not. No one was blinking. No one was changing anything. No one was doing anything. Now, normally, even on a week like this, you probably have a plus or minus 10 points on the S&P cash. So the margin of error would take us probably at a low of 1650 and a high of 1670. That would probably be close enough for government work. And but I tell you what, we have a huge amount of energy we've built up. They held this market up longer than it should. I discussed that somewhat in the previous days, especially about the Fed manipulation. About every time this market started to look like it had been and was going down over the last 3 days, they trotted out another Fed president out into the street to try to buoy the market. They tried that this morning yet again, and it didn't work. And that probably means that we've got a little additional steam in this market to the downside that most people wouldn't or didn't think of. But yep, we've got a market out here. We probably got the lion's share of expiration. Normally, when you get a day like this before the Friday before expiration, you get all the action today, and then a low volume day normally on that Friday expiration. So that's why I'm pretty much saying I suspect that we have or gotten the lion's share of what we're going to get before Friday's close today. And we'll look at it. But it looks to me right now that there are a few things that's setting up, and we'll be talking about those in today's show. So now that we have a setup where we know that we've got strong volume, 2.4 billion shares already, how many days did I come in here and start complaining about that? And probably all of them over the last week or so, where we just had a pitiful volume. We had some volume pretty much at the close, but during the day, 1.8 million shares sometimes, or 1.8 billion shares sometimes starting the show. 2.4 is actually a decent day, so we'll have to watch that. But in fact, I'll probably check options and see if we've got any movement. But it really looks from the up and down action in here that 16 at 60, 16, 65 range is quite the target point for option market makers out here. We've got a lot of stocks that are off strongly today, and we're going to get into those. First is a Cisco. Let's take a look at that CSCO. And this thing is off on very strong. It was down as much as 10%. It's off about after hours last night. It is off 7.5%. They are going to lay off 4,000 workers. And, of course, they had a share buyback during the last couple of months, and that has been supporting the price of the stock. But off strong. And what you really have to think of is, where's my little calculator? Let's get this calculator up. There we go. I'm going to figure something out real quick. We've got well, this would be easy, actually. I'm going to use some round numbers. There's about 5 billion shares of Cisco Systems out there. Think a little bit more. At one time, there was 1 share of Cisco Systems for every man, woman, and child alive. I think we're up to 7 billion people, and that is a little bit more than Cisco shares. But even in the mid-2000s, there were more shares than people alive of Cisco Systems. So the thought of this thing ever really getting going was rather interesting. But one thing I do know is that you got 5 billion shares. You got about a $2 drop in the price of this stock today. It's off $1.95 right now. That's a $10 billion in market cap in one day, and it came right after the 5 o'clock hour had started, and they started their conference call. Now, one of the things I disliked today was CNBC can be very good and it can be very bad. I suspect one of the worst things about it is that they have a commentator, and his name is Kramer. This is the same guy that told everybody to be buying huge amounts of RIM or BlackBerry, whatever you want to call it today, at 15. And, you can be wrong in this market. In fact, a lot of people are wrong. There was just absolutely no way that the facts of the matter supported the case, so I thought he was a shill. Well, I think he's a shill again this morning because he came out and said, you've got to be buying this stock. It's $24, $23. You've got to be buying it. To tell you the truth, I wouldn't buy any stock, no matter what it was, the day after the thing drops 10%. If let's say that it was bogus information, the market reacted to it incorrectly, you're probably going to see that this actually would close back up to flat by the end of the day. Normally, when you see an entire day of a sell-off like this, it isn't just a market that's having tantrums. There is something there, and it's visible. The other thing is that even if you're just looking for a bounce out of this thing, you wait 3 days, 1, 2, 3, because there's always people that are going to be highly margined in these kind of stocks to try to get the most out of their move. And those guys are going to have 3 days to get a margin call. So normally you don't see stocks that disappoint or actually that surprise significantly close that gap within 3 days until those margin, the people that are margined are actually forced out. I know Tom brought that up last night during our webinar about the art of timing trade charts, and I'm sure he's going to talk about it tonight. But Jim Paulson actually sold half his GLDs at the very lows of the market in gold. They just keep going until you sell. They very rarely let fools out easily in a marketplace. When you have that big a position, when you have a small position, like a personal trader, a lot of times you'll see that a good portion of these gaps do get filled over the next week or so, and you kind of have to watch it. But going to be interesting. See Andy Heck, who is my stalker. He follows me around on Tuesdays and Thursdays. I suspect he has a real job the rest of the week. But he'll be on right after this. And, yeah, it's going to be a big commodity day. And probably the thing that I'd be asking today is that we have a hurricane in the Atlantic. Hey, stop that. I've got a problem with a little Vixen, and Diablo they're starting to cause problems again today. So when you hear the little barking in the background, it'd be interesting. But Andy says NG. I guess he's talking natural gas. So maybe that's what he'll talk about during his show today. We've seen some nice movement in natural gas. And, of course, that is moving before numbers on Thursday, of course, I guess after numbers today, which were the EIA numbers that come out at 10:30. Do we have natural gas up here? I do not. I know that UNG is back above $18, and maybe he'll talk about that some today. We will be back in a minute. We've got a lot of news and a lot of charts to look at. We still have a lot of action out here, and we'll be back in just a second.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, we've got a lot of news out here, but we were looking at Cisco before we left, and let's see, what do we have on here? Low a day was 24.28. It's probably going to close somewhere down about 8%, something like that, trading off at 24.55. But we've got a nice gap down here that had big volume to act as support, but it's around $23. And, of course, a big stock when you got 5 billion shares of anything are always tough. What can you say? Okay, other things of interest out there. Walmart came out with numbers, and of course they were bad, or at least not good. They also had a very curious comment this morning, and that was that people were buying a few big-ticket items. So they were selling big-screen TVs, but they were not selling toasters and blenders. They weren't selling bedding. They were selling food, and they were selling big-ticket items, and there wasn't a lot of room between the two. And they think that this is a basic change in buying habits from the public, and it may be because of the weather this summer, but that remains to be seen. They are actually thinking that this has the earmarks of a real change in buying habits from the general public. IBM is the dog that didn't bark. If you're a fan of Sherlock Holmes, one of the things that we've brought up out here is that we still have a load to test on IBM. I suspect that this thing wants to expire at 185 tomorrow, but there is still a big gap out here, a low from November 15th, 2012. That low has not been tested, but certainly we've gotten down several times with much higher volume than we have now, and we've broken the last, the April 22nd low and the June 28th low that had about 10 million shares. We've gone through that on much lighter volume. The strongest volume that we had out here was about 4.5 million shares. Let's see if there's anything else out here. No, that was it. Now, there is a gap also about 183. And it kind of looks at the moment that we've got plenty of energy to continue down with IBM. But the reason I brought up Sherlock Holmes was one of his famous cases was the solved by the dog that didn't bark. Someone was murdered, and of course the murdered man's dog had been in the same room, but had not barked and woke everybody up. So Sherlock had to infer that the dog knew the person. If he hadn't known the person, he barked at all strangers. So you kind of can infer that. What we can infer by IBM is that it had continued to test these previous lows at 187 and 188 of June 28th and April 22nd, and did close back above them for a moment. Volume did not come in. It closed back again the next day, and you basically had your 3-day, which is 3 days, which is one of my rules, which is you want to give the thing about 3 days. If it does not take off with lighter volume, there is probably something else going on that you should infer. And in this case, is it general market weakness, or a lot of people just are very worried that the global slowdown is going to affect IBM? It has spent 10 years firing people and keeping its EPS alive by cost cutting. The question is, when's the last day when you can fire somebody, and when is the last day that you can actually cut costs without cutting revenues? I suspect that the IBM thesis that this is always going to be the bluest of the blue chip may get a little purple here in the near future. We kind of covered this again on the when we talked about in the webinar last night for the art of timing the trade charts. I appreciate everybody that was involved with it. If you didn't get a chance to listen to it and you are a subscriber, emails will be going out today with links so you can watch it again. But I think you'll really appreciate the back and forth that Tom and I had last night. So other stocks of interest out here is Apple. Of course, this thing has held up extremely well today, and we'll get into it when we come back. But Icon's press offensive continues on. We'll talk about that. But I think we are right in this area and looking for that 507 to 514, and we'll talk about that when we come back. Thank you, VIX.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Anyway, we were talking about Apple just before the break. I've shown this a few times today, but I think we've got a pretty good indication that we're going to get into this confluence area. Confluence is where two different Fibonacci retracements meet between the 382 and the 781, and we've got that pretty much set up here if you're watching on Tiger TV or in the den. 507.33 to 514.56. What you'd like to do is see probably just the top of this gap broached. If you were long, you'd probably decide that that was it. Unfortunately, we do have a operator. For those that are new to the show, probably one of the greatest single investment books ever written. Is called Reminiscence of a Stock Operator. It is a thinly veiled treatise of Jesse Livermore, who was a great trader. Unfortunately, he was also mentally ill and manic depressive. If they would have had lithium, he probably would have owned the world. But he wrote probably one of the single best books about being a stock operator, about pushing stocks around, forming pools, and I think we've got a little bit of that. But once you push a stock up, you've got to have some time to probably start selling it to the bigger fool theory people that want to buy it. Part of that is keeping the stock flat and continuing a PR offensive. Now, I think what we've found out in Mr. Icon is that he has timed several of these stocks almost perfectly into a PR barrage, Netflix being one of them, and Herbalife, some of these others. Done an excellent job. But what he's got is a direct line to these CEOs, and he lets them know when to drop the information out there, or in the case of Twitter, when he needs to drop the information, when he can create a huge short squeeze during options week. The question would be, if I could ask him any question and he would actually answer it, would be, how many puts or how many calls did you buy on Apple this week? Because monstrous volume out there. I suspect he had more than a few. But this thing's probably not going to roll over. But if you were long and following him in the trade, probably that 514, 515 range, if you hit that, is the top of the gap that came down on fairly strong volume. But at the same time, it is this confluence level, and I suspect you're going to see very, very strong resistance at that level. Tomorrow, I expect this thing to probably expire right at $500. Why he has a lot of juice in the marketplace. There's still a lot of option market makers out there that are probably more than willing to push this thing down to $500 and kill off as many options, since there are probably a ton of them at the $500 mark. Of course, tomorrow is options expiration. Expecting kind of a flat day tomorrow, or at least not such a huge day. And we're probably going to see a lot of volatility coming back on Monday and Tuesday. That will be setting up options into the September-November timeframe. And imagine that we're going to see a lot of action up and down on Monday and Tuesday. Right now, for what I'm looking at in the S&P, we've got a good possibility of another 40 points down between now and mid-September. Everything is showing, at least the people in options right now are expecting 1620 as their spot that the market will hit before expiration. And what is expiration in September? I should already know that. What do we have? It's going to be the 20th. We got quite a little ways going out here. And, of course, that'll take us through the Fed announcement, I suspect. Forget what it is. I think it's in the first week of September. And all the talk of QE lightning. Other things of interest out here, been watching Facebook. We talked about that, a week and a half ago. This was in probably the best price that you would get, and that price was the IPO price out here. That this thing pretty much had got into it for a couple of days, and you were going to find a massive supply line out here. Of course, what is it trading at here today? 36.34. Of course, it got a high of 39.32. Now, you're probably going to come right back around to this $33 level, at least, to come back where the gap took off $32 level. So if you're believing they have figured out and cracked the code for online or mobile advertising, that's where you would want to look at it. I still think that you need to wait for a second quarter to come through and see how many of those people that advertised with Facebook in the last quarter continued their advertising. Was it worth it? I think we're going to have a much better read. I don't think even Facebook knows. So that is one of the issues out here is you start advertising with a new company. You say, okay, I want to advertise on that show on ABC at 8 o'clock on Wednesday night. The question is, you really don't know. You can kind of guess at what you expect the reaction to your advertising to be. But maybe the first time you get a lot of action, maybe the second time not so much, maybe the third or fourth weekend in a row you don't get the same kind of action. And that is what advertisers right now do not know with Facebook. Did it just work the first day and it was great? Are people ignoring those ads now? And what can we afford as a company to pay Facebook for these online mobile ads? Are people paying attention to it? That they were able to sell them is a good sign, but we need to see what the retention is and just what the fatigue factor is in the advertising and what a lot of these new advertisers to mobile are willing to pay for it. But I'm thinking that this thing, especially with the market weakness, is probably going to come back to that $33 level. We had Kohl's out. It actually had, I think, a better number. Is it KKS or KSS? KSS. Kohl's department store. I always liked them. I certainly haven't found any of them around. On a horrible day, you always like to know the ones that are moving contrary to the rest of the market, and Kohl's is one of these. Did have a decent volume today. Didn't break the previous high, which we're looking at it here at 55 at 25. But this one did come up with a decent volume on a horrible day out here. And energy, not all that bad so far. Back from the $41.35 low on January 3rd of this year. It is bucking the trend, and you not only want to look at the stocks that were weakest on a day like now, today, but you always want to look at stocks that are strongest on a weekday. So if the market does turn around, you can get on board with those. Another one I wanted to take a quick look at was the weakness in Google. This thing had gotten up to a fairly decent high. Let's go here to 6 months, and gave a clear sell signal. Thing pretty much dropped on heavy volume on earnings on the 19th of June. It's been kind of limbering back around here. And what do we have today? This thing has broken the previous low, which is June 24th, that had 3 million shares. Fairly light volume so far today. We'll have to see how this thing closes. But you also have the next low at 847 from the June 6th low. And yet another gap that was on minimal volume back at about starting about 8:30 to 8:35, something like that. So you've got a few more things out here. Actually, not a bad-looking chart, and maybe setting up for a bigger trading range. But you had a clear and unambiguous sell signal, and that sell signal was at the top. The May 20th high had 3.9 million shares. You went $8 above it. You closed back below it. A valid sell signal, and what else can you say? The thing's back to $68 cheaper today. So these charts are working. Price and volume trading has worked for 110 years. Not a whole lot else to look at. One of the things that I think also has set up a top in this market, at least for the next 3 weeks, is that we are at the end of new stocks, and what I mean about that is IPOs. Today we had one of the probably the last decent-sized IPO coming out. It is a third point reinsurers. Symbol is a TRPE. It was flat earlier. I'm not going to even look at it. But what we do know is that this one was downsized, and the lower end of the trading of the expected range to go out. And pretty much everybody else is withdrawn or moved any additional IPOs into September for the first profitable or for the first probable days where they could push out more paper. And of course, the market's job is to do that. It is to push paper on unsuspecting people. But we are much better at TFNN. We educate the public, and you're suspecting and skeptical, as you should be. So when we're looking at this, just be aware that one of the biggest ways that Wall Street makes money is IPOs and pushing all this paper out. And what do we have? We've got the last gun or bullet in the gun being pulled, and they're going to probably reload. But my guess is that, and what I was looking for in the pipe just doesn't look all that exciting, even into September. So we may even see the IPO cycle move out to October for a possible new IPO offerings. Of course, one of the ones that is being talked up is Twitter. They're actually working on some of the problems that Facebook had when it came out with retention and advertising. So it really looks to me like Twitter is firing up for their IPO, and we may start seeing the red herring, which is the initial prospectus, probably coming out in September. That would probably mean that we'd see a Twitter probably in the first couple of months of next year. So we always have to keep an eye on that. They're actually, for people that are asking, what are they really doing? One of the problems with Facebook was there were a ton of phony Facebook followers. And Twitter is actually going back and spending a lot of money to look at Twitter signatures. That is, people that check their accounts every day like humans and not robots, that add stuff of value and difference to let them know that they aren't robots. And they're going to be getting rid of a lot of these Twitter accounts that are owned by companies that say, hey, I'll get you a lot of Twitter traffic. And, of course, by getting that Twitter traffic, other people are going to start paying attention to you because, of course, well, that guy has a lot of traffic, so we ought to be looking at his Twitter feed. And, of course, I guess you can buy your way into Twitter fandom and popularity, but Twitter is going to try to get away from that. Facebook had a big issue with it, and part of the lawsuits from the IPO are that Facebook didn't properly disclose some of that. We talked about the hurricane. I guess Andy Heck's probably going to talk a lot more about that in the next hour, in the commodities hour. We've got gold. We've got natural gas moving. Kind of an interesting day. Trading out at 1664 on the S&P cash. Volume is good, and 2.7 billion shares. And I think we're going to watch this thing, but we've had probably a high in the last week of maybe 3.5 billion shares on the consolidated New York Stock Exchange tape, and I think that we have probably the first day that we could get into 4 or 4.5 billion shares today. So I'm going to be watching how the volume comes in at the late part of this day and how this market closes. But again, just because we had a huge day today, I'm not expecting a huge one tomorrow, but I suspect that we're going to see a lot of people go into the weekend and come back Monday in a sell-in mood. And again, my next target down in this market now that we bought or broke that 1680, we were hammering at 1683, and then we go back up to 1686. But now that we've busted that, this pretty much opens up the 1620 area, and I think, even if it's a low volume move through the rest of the summer, I think we've got an excellent opportunity to go back and hit that 1620 before we even get a first or decent bounce in this marketplace. I didn't quote the VIX out here today, but certainly, up 11%, 1454 as we speak. And a nice day, 11.5% move on the VIX. And she went to sleep, so we don't get a bark. We'll be back in just a minute.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Trucking, got my chips cashed in, keep trucking, like the doodah man, together, more or less in line, just keep trucking on.
Well, no disco today, thank God. And, of course, this day in history, what we have, it was a hippie love-in, long-haired, maggot-infested FM types on this day in 1969. We're at Woodstock, living their summer of love in their, that evil, it was just disgustingly muddy. It didn't look any good to me. I guess it was fun if you were there and you were on acid, but I don't know. I saw movies of it. It was fine by me. Didn't look too healthy. Kind of reminded me of the movie The Holy Grail from Monty Python, where they were rolling all the dead bodies through the mud. Just filthy and nasty. And of course, a bunch of smelly hippies. And maybe you were a smelly hippie, but hopefully you've gone beyond that. Anyway, what else do we have going on here in the market? Wanted to just take a quick look before the end of the day. And if you're real quick, you can get in and call me at 877-927-6648. Volume is still moving very quickly on the New York Stock Exchange consolidated tape. We're at 1663. And I'm going to watch this very closely. If we do get that 1660 to 1665 close tomorrow, I'm going to expect that we probably get a little pop, maybe into Monday, maybe even into Tuesday, and then the move down continues. Of course, options will be rolled over, and it is one of the bigger options rollovers of the year, as everybody wants to get pre-positioned into the fall season. And for the most part, I think at least the option guys are expecting interest rates to rise and the market to pull back. And I think we've seen the first salvo of that over the last few days. And just check and see if we've got anything else going on in the market out here. We've got, let's see, gold still, it was up, 36, up 31.30 right now. Silver up $1.26. We've got platinum up $22. And still have a little bit of move in copper today, which is kind of interesting. Crude 107.32 for West Texas, which is up 47 cents. What else can you say out here? Natural gas up $18.07 on UNG. So we've got a lot of commodities, and of course, in just a few short minutes, Andy Heck, who follows me everywhere across the globe on Tuesdays and Wednesdays, will be coming in with Commodities Hours. I know everybody appreciates it when we've got somebody between me and Tom O'Brien talking commodities, and especially on a day like this, where you can home in on what's going on with it and the movement that's going on in natural gas, in gold. Maybe he'll touch on copper today. Very interesting. So that will be that. Anyway, tomorrow we'll be back at the same time, 2 to 3 Eastern Time. And, of course, tomorrow night we'll be sitting in at the 4 o'clock hour with Tom O'Brien for the Tech Insider Hour. And, of course, Tom, last week I did it solo. And it'll be always nice to have somebody to bounce things off of during the show. So just remember, it is going to be the same bat channel, same bat time. But I will be in the luxurious gold-plated TFNN studios tomorrow, so you'll see my bright and shining face on Tiger TV instead of just my charts. And some people say I have a face for radio and a voice for silent movies. But, I don't listen to them. I press on. See you tomorrow.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.